What's up everybody? Welcome to the Stocks channel. Today's episode is going to be a special intraday update. We're going to take a look at the stock market while we're still trading for the day, and then we'll take a look at the weekly picture and look at a more macro level view of the stock market and where we're likely heading in the future. But before we get into the charts, please help me out by smashing that like button and go ahead and subscribe to the channel so you can follow along with all of my daily updates. First up, we'll take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so just a reminder, I am filming this intraday, so we're going to be seeing the prices moving around as I film this. But right now, we've got to remember on the S&P 500 SPY ETF, we're still in a bullish trend, and we do have that extreme bullish price action, and we did get a little extended too far too fast. So it's likely from this level, we're breaking out of this resistance trend line, and we are failing to form a higher high on the daily chart. So if we fail to form a higher high, we're likely going to start retracing down and closing some of these gaps below. So I have the Fibonacci retracement levels right here on the chart, and we're looking at something like a 0.382 or a 0.5 retracement from this high, and we could go as low as a 0.236 before finding support. So right now we do have support all the way down here at our support trend line, but any of these gaps or Fibonacci retracement levels could also be support. So as we start correcting and as we start selling off, we don't want to make any assumptions about where these support levels are going to be. We want to watch these price levels and we want to wait to see where there's going to be bounce and where we're going to find support before we get too bullish on this market. Yes, we have bullish price action and yes, we have bullish trending, but we know that we don't want to FOMO in and chase something that's this far extended above the 5 EMA. So we need to let this come down a little bit and cool off before we really want to start buying into this market. Now don't forget, there is potential that we do come all the way down to SPY levels of about $330 where we would find support at this trend line, but there's no guarantee we'll get down there. Just remember, it is a possibility. So use that level around 330 to manage your risk, and if you know we can get down to 330, you really don't want to be buying up here at 350. So we're bullish long term, but the message here is you don't want to chase something that's this far extended. Now it does look like today we closed the gap at 348, but we still have the gap below at 338, and we could find support at the top of that gap at 339. So filling that gap is somewhat closer to a 0.5 Fibonacci retracement, but we could at least come down to a 0.382 Fibonacci retracement around $341. So watch these levels closely and do your best to try not to FOMO into this market, because there's always going to be another buying opportunity right around the corner. If you find yourself not really understanding this market and having trouble navigating it, consider joining the Stocks channel Discord. There's a link in the description on how you can become a member of the Discord server, and I'm doing a lot more detailed entry and exit type trading on the Discord. So if that interests you, there's a link in the description on how you can join. Next up is the Nasdaq 100 QQQ ETF, and we also see the Nasdaq got overextended too far too fast and created a lot of these gaps. So it's likely we're going to start seeing a retracement of this move, and we do have that gap that'll close around a price target of $288, which is also our 0.236 Fibonacci retracement. So it looks likely that we're going to retrace at least that far, but it's more likely that we're going to come down to the 0.382 Fibonacci retracement, or at least the 0.5 around 281. Now 281 could be support for two reasons. We have the 0.5 Fibonacci retracement, and we also have the top of that gap. Now that gap is a very large gap, and it won't close until we go all the way down to a price target of 276. The bottom of our support trend line on the Nasdaq 100 is somewhere around 274. So we have a lot more potential downside, and use that level to manage your risk and know that we could potentially go all the way down to that level before we find support. So you don't want to get too bullish and you don't want to FOMO into this market, because there's a lot more downside where we could find better buying opportunities, and it's just right around the corner. So be patient and let the trades come to you. Don't try to force something that isn't there. You can see on the Nasdaq 100, we also got rejected at the previous high on the daily close, and we are finding resistance at that level. So it looks like we could be heading into a 2 or 3 day sell-off and possibly longer, so we just want to be patient and wait for the next opportunity. You can see we have bullish price action and bullish trending, so there's no reason to become too bearish on this market, but we know even with bullish price action and bullish trending, we still get dip buying opportunities, so we just want to wait for that opportunity and start scaling into a position. Next up is the Dow Jones DIA ETF, and we see the Dow never even got up to its resistance trend line, but it's also finding resistance at this level. So it's likely pressure from the other indices driving the Dow lower, and the Dow did form lower highs and lower lows. So the Dow is the most bearish of the three indices, and on the Dow we do have gaps all the way down at 269 and 265. The previous support was 264, so there's also a lot more downside potential for the Dow, and that would be potentially another lower low, which means the Dow could be heading into a bear market. Now we do have bullish trending and bullish price action on the Dow, so it's too soon to say exactly what's going to happen. So we just need to be patient and wait to watch how this sell-off is going to play out and which price targets we're going to find support at. Next up is the VIX, which is our fear indicator, and we see the VIX actually going down today even though the market is down. Typically speaking, when the market's down, we should see the VIX going higher. So the VIX is giving us a little bit of a warning sign and telling us that there could be some divergence in the market. So what you need to know about the VIX is that fear typically leaves the market when the market wants to head higher, and the VIX should head higher when the market's heading lower. So pay attention to the VIX, and if the VIX starts climbing, we'll know that we're likely going to see some more volatility and some more selling in the future. Next up is Apple stock, and we see Apple stock also went too far too fast, creating some gaps, and we are getting a little bit of a sell-off today. So look for the gaps down at 115, and the next gap is at 111. If we break and close below the previous support at $109, we're likely going to go close the gap down here at 96. Now Apple's heading into some bullish price action and bullish trending, so we're not bearish on Apple by any means, but we're just looking for a dip buying opportunity. Next up is Tesla stock, and we see Tesla holding up above all the moving averages and going into a short-term bull trend. So this could be a buying opportunity on Tesla as we're heading into a bull trend and holding up above support right around that 20 simple moving average. Next up is gold, and we did see gold break through resistance yesterday, and right now we're waiting for resistance to be tested as support and wait for that bounce, and we want to take a long position on gold and get ready for the next gold bull market. So gold's looking good, and it looks like this could be a good buying opportunity if we could hold up above support at 1930. Next up is the US dollar, and this is DXY, and we see the US dollar still looking bearish with the price action going below all the moving averages and the trend becoming bearish. We could be holding up on support right around this 92.3 level, but if we break down below that, the dollar's going back into a bear market and we're going to continue to see lower and lower prices. Remember, a weak dollar likely means we're going to see higher stock market prices. So overall, we still see some bullish indications for stocks, and a weak dollar is telling us to become bullish. So overall, we expect a weak dollar to be bullish for stocks. So if the dollar continues to downtrend, that will make us more bullish on the stock market. Next up is Bitcoin, and we see Bitcoin doing exactly what we expect, heading up to our price target of around $17,000. Bitcoin had this huge day of big volume and big price action movement, and it looks like it's just taking a day to cool off before it continues to head higher. Just a quick update on some other cryptos. We see Ethereum broke out and it's going to a new high, and it looks like Ethereum could be heading to 476. On Litecoin, we also broke out above $59, and it looks like Litecoin could be heading to $67 next. Alright, I want to spend the rest of the video talking about the stock market on a weekly level macro view of the stock market to kind of get an idea of where the stock market could be going in the future. So we're looking at a weekly chart of SPX here, and we can see on a weekly chart that we did maintain that bullish trend with today's week going well above the 5 EMA yet again, and we're maintaining that bullish trend that we were talking about from Sunday's video. We see the 5 EMA still trading above the 13, and the 13 still trading above the 20. We have positive sloping moving averages, and the 20 simple moving average and the 50 EMA are still positive sloping. So as long as we have this strong bullish trend, we're not going to be bearish on this market. In a strong bullish trend, we're looking for dip buying opportunities. Remember, if you're bearish on this market, you're going against the trend. And if you go against the trend, you're likely to lose a lot of your trades. If you're bearish in this market, you have some type of bearish bias because the trend is telling us that the stock market wants to go higher. We see continued evidence that the stock market is finding support at critical levels and bouncing from there, maintaining the strong bullish trend. So despite all the noise going on in the news, it's completely irrelevant because the stock market price action is way more important than news headlines. Follow these trends and follow the price action, and right now you can see we're very bullish on this trend and very bullish on the price action. We never even got all the way down to the 50 EMA. So right now, even if the stock market starts pulling back to the 20 simple moving average on the weekly chart, we can continue to head higher and we can continue to grind higher on this market for years to come. If you don't think it's possible for the stock market to head higher for years to come, you have some type of bear bias that you need to identify, and you need to go back to looking at the trend in the price action. We're coming out of a huge crash, which is one of the biggest we've seen in the fastest amount of time in history. And now we're having some sustainable growth and we're maintaining a strong bullish trend. So if you remember back to the daily stock market analysis that we're doing, we are expecting a dip in the short term, but the macro level view is still extremely bullish and we still have a very nice strong trend. We can switch over to the Nasdaq 100 NDX, and on the same weekly chart, we can see that the Nasdaq 100 found support at the 20 simple moving average, and we did bounce from there after the election. The 5 EMA is still well above the 13, and we have that great positive sloping 20 simple moving average and 50 EMA. So we're in a strong secular bullish trend right now, and we don't want to become bearish just because the stock market's going higher. That's the definition of trying to time the market, and if you're becoming bearish just because stocks are going up, you're just going to become a permanent bear in one of the best bull markets that we could possibly have. So follow the trend and follow the price action, because if you became bearish the last time we broke out of this all-time high, look how far the Nasdaq 100 has went since that breakout. We've gone up an additional 24% since we broke that previous all-time high, and there was a lot of people that were becoming bearish just because we were going higher and they thought we shouldn't be able to go higher. So follow the trend, because the trend all along was telling you bullish, and follow the price action because it was also telling you to be bullish. Don't try to go against the trend and the price action, because trends and price action are the #1 thing to watch for in the stock market. Leave your bias at home and don't take it with you to the trading world. Trade with what you see, trade with the technicals, and trade with the factual data that we're able to witness with the price action. We can also switch this over to a monthly chart, and even on the monthly chart, we see a very strong bull trend in the long term. The price action is holding up above the 5 EMA, and we still have all of the moving averages well stacked to the bull side. We could look at a monthly chart of the SPX, and we see the same thing with the price action holding up above the monthly 5 EMA, and we see that very strong monthly bullish trend. So right here on the Stocks channel, we are long-term bullish, and that's not a bias, that's just following the trend and following the price action. So remember, if you're out there and you're looking for a great trading community, there's a link in the description on how you can join the Stocks channel Discord server. This volatility is giving us a lot of buying opportunities that we're making a lot of trades right now, so now's a great time to be a member. So please remember to help me out by smashing that like button, and if you're new to the channel, go ahead and smash that subscribe button so you can follow along with all of my daily updates. Thanks for watching, everybody. Have a great weekend, and as always, I will see you in the next episode.